It's from the Thomas again. We're working on financial accounting, chapter 4. Hopefully, it's the last video for the problem 4A. I'm going to try to get back where I was so that I don't have to redo too much. So let me share my video. I think I've held my page. All right. So the last thing we were working on before Zoom crashed was putting together this balance sheet for the problem 4A. So once again, we're following along with the spreadsheet that hopefully you put in your adjustments for, and then once you do, your balances will come out, and then the balance sheet information is over here. So now we're ready. We've put in all of our current assets, and they total to $21,300. Okay, and that would be these three right here. If you highlight those, you can see that the sum shows 21,300 without even having to do a calculation for it. All right, the next thing is equipment. Okay, equipment is 110,000, and it has accumulated depreciation that goes with it. Okay, so we're going to put that in as a negative, and they're showing 33,350. Okay, now we want book value equipment. Okay, they want the total there, book value equipment. Okay, just a moment here. And the book value of that equipment is $76,650. $76,650. Now we're ready to put trucks. The trucks are $60,000. It's accumulated depreciation. Trucks negative 15,000. I'm going to put a negative in here because if it's not right, we'll fix it. Usually they want it to show that, and then book value trucks. This tells anybody who's looking at it how old, right? So they've expensed about a third of that equipment. They've expensed about a fourth of the truck. So we've got 45,000 remaining there, and then the total property, plant, and equipment. And then total property, plant, and equipment. Error. There it is. That one comma made the difference. There it is. So we're going to add these two together. So 76,650. Okay. So we have, all right, 76,650 plus 45,000. Okay, we want the total there. That is 121,650. 121,650. And then we simply want to make sure these add up to this. Now it's supposed to, but just to verify that it does, it doesn't hurt anything to put it down in the note, in the spreadsheet. So I'm going to move this over. Okay, so let's take 21,300 and 121,650 and add those two together. And that is not correct. So let me see what's happening here. Hold on. 15,000. Oh, wait. Trucks. Oh, I have the wrong amount. My fault. My fault. All right. So 60,000 and 21,200 is what we want here. 21,200. Okay, I'm glad I looked at that. Now this is not 45,000. Okay, so 60,000. Let me 60,000. So here it is. Here we go. That's why I had that down. Yep. 38,800. And now we want, okay, so 76,000 and 38,800. These two together is the new property, plant, and equipment. And now let's see if this adds up. So we got 21,300 plus 115,450, 115,450, 136,750. So I think we're good for our balance sheet. Let's just check it. Hopefully it'll check. Okay, good. 42 out of 42. Okay, we are done with our financial statements. Now we need to return to the general journal and the general ledger. Now it's time to close. Okay, so if you want to use this spreadsheet for your other 4A, you could put it down here, 4-4A algo. Now you'll have to put in the unadjusted trial balance, and then you'll have to put in all of these, but you don't need to put in anything here, okay, because it's got formulas there, and it should work. Okay, so don't put anything where you see a dash, okay? You might need to where you don't see a dash, like if you'll need to put this one in, however much you put in here will come in here. However you put, how much you put in this peach cell, this peach cell will produce it. Okay, so interesting. Okay, all right. Let's close this, and you don't have to submit this. This was just for your purposes to keep track of information, and I think it does a good job. It serves its purpose to get that. I'll tell you what, we can use this for our closing entries, and here's how. When you close, let me move this over. When you close, we're going to close everything here. Okay, and I'm going to make that a different color. I can. Hang on just a second. Okay, let's make all of these a color because they need to be closed. They need to be closed. So all of those need to be closed, and so does this one. Remember, closed means you need a zero balance. Okay, so I'm just going to use these to represent what we need for closing. I'm not even, okay, let me see if I did. Let's see if I made key accounts. Usually I do, but I like you to be able to see it. Okay, so let's see here. Did I do that? No. So here's what we're going to do. We're going to use the spreadsheet. Save a little time. And sometimes you're just going to have to get used to looking at something a little different. So once again, we've got to close all these. So these will have the balances that we need. So I want you to go to the general journal page, the next page. So I need to make it a little bit bigger. And we're going to do the closing entries. And just to remind you, the closing entries will zero out all revenues, zero out all expenses, and zero out the dividend account. Okay, so we're going to the general journal, page 27. If I can get there. There it is. Closing entries. This is page 27. Okay, and we do have to post these, so we have to be careful with what we're doing. Just a little bit. Just over just a little bit. Okay. I think we're okay. Go down to the journal. Yeah, we're on page 27. So closing entries happen on the last day of the month. What are we going to close first? First thing we're going to close is revenues. There is your service revenue, 160,000. So if it has a credit balance, we're going to debit it. Okay, so this is going to be service revenue. Okay, we'll come back to posting it after we do. So we're going to make that as the entry to close that. Okay. Now we're going to put in all of our expenses and credit them for the amount that they show as a debit. So I'm looking at, be careful. Okay. So we've got supplies expense. Supplies expense. It's a credit of $22,500. Okay, then we want rent expense. It's a credit of $10,600. Truck expense. It's a credit of $9,000. Depreciation expense of equipment. It's a credit of $83.50. Depreciation expense truck. Truck. All right, 6,200. See, normally you would pick a drop-down box and it would tell you, and it wouldn't let you use any account that didn't exist. So, all right, insurance expense. It's a credit of $1,800 and miscellaneous expense. It's a credit of $4,800. Now, do we balance? And here's where it'll tell us that we don't, right? We do not balance. This is exactly what we've put in, but we've put in the opposite. So the opposite is the amount of $51,500. That's what's going to make this balance. But what is that? What does that represent? That represents the net income. And where does it go? It goes in as a credit to retained earnings. So don't worry, we're going to go post all of these here in a minute. Okay, now let's go ahead and do our last closing entry, right? So then that's the dividend. So if dividend has a debit normal balance, how do we get dividend to go to zero? So to get dividends at zero, we must credit it, and then we will debit retained earnings. Okay, for the same amount. All right, now let's go quote. Let's go down to service revenue and put a debit of $160,000 in the ledger. I would close it all. So you don't put something somewhere you didn't want to. Let's put March 31st. Let's put closing. Nope, it doesn't like it. No. All right, it is coming from page 27. we are debiting 160,000 to, and so this is going to be 0 when we're finished. Yep. So a debit against a credit makes that balance be 0. Close it. Okay. And this will help us go to wages, expense, put in the date, page 27, put a credit in for 45,600, put 0 in. Close it. Go to supplies expense. Put March 31st in. Page 27, we're going to credit 22,500, put a 0. Rent expense, March 31st, page 27, 10,600 as a credit against that debit, which is 0. Truck expense, we're going to close it to 0. Page 27, credit is $9,000, leaving 0. Depreciation expense, it's a credit of $8,350, which leaves us with a 0 balance in depreciation expense equipment. Depreciation expense truck, page 27, crediting 6,200, leaving the account with 0. Close it up. Insurance expense. So we're just marching down the row here of all the expenses. 2,700, 1,800, 0. Last one is miscellaneous expense. 27, crediting 4,800, leaving miscellaneous expense 0. Now we're not finished. Okay, we got as far as getting rid of all of these. Now let's go back up to here and let's put in these numbers. Okay, so service revenue I think is 41. Yep, 41. And then we have 51 through 59 basically without using 58. Okay, so this is 41, 51, 52, 53, 54, 55, okay, 56, 57, and this gets to 59. Okay, so 58 gets left out. Retained earnings is going to be an equity account, and it has retained earnings 32. Retained earnings. All right, so this is the journal entry that we now need to go down to retained earnings as a credit and put 51,500 in. The retained earnings is account number 70, and we'll put in March 31st. On page 27, a credit of 51,150, which adds to retained earnings. Okay, it adds to retained earnings to give it a new balance, and it'll match up with what we did on the statement of stockholders' equity. So we have 121,150. Okay, 121,150. All right, we have one more entry to post. We go to retained earnings again. This time we're putting a debit of 15,000 in it. Retained earnings. So this is closing the dividends account. Page 27, 15,000. And now we're going to need to back out 15,000 out of there. $106,150. Close it, and then we need to make dividend 0. should be our last posting here. And then the last thing we'll do is put in a post-closing trial balance. So we want to get rid of this. So now it has 0 in it. All right, let's see what we've got now. Let's check our work. If we've got everything, see what we've missed. Got 162 out of 162. So one more time, the only accounts that we are going to put into the post-closing trial balance is cash, supplies, prepaid insurance, equipment, accumulated depreciation equipment, trucks, accumulated depreciation trucks, accounts payable, wages payable, common stock, retained earnings. That's it. The dividends, the revenues, and these expenses will not be on post-closing trial balance. So, okay, so let's go ahead and put for retained earnings 100. I'm going to write it down here. The retained earnings has a balance of 106,150. Okay, retained earnings. I don't forget. I would always write that down because when you're doing the post-closing trial balance or the balance sheet, right? We could always look at the balance sheet. That's fine, but you can't use retained earnings from this spreadsheet. And you cannot, or it won't balance. Okay, so now I'm going to go to that post-closing trial balance. I think so. So that should be our last piece. Oop. 51,150. There we go. Yep. Put that in incorrectly. Okay, what else have I left out? Oh, I forgot to post these. Sorry about that. 32. And dividend is 33. Let's give it a try. Yep. Okay. So we got 73 out of 73 there. Forgot to do those postings. I put the wrong amount in for, this really represents net income. Okay. All right. Back up to the top. Get rid of the ledger. Get rid of the journal. I'm not leave the ledger open. Get rid of the journal. Now we're just going to do the post-closing trial balance. We can use some of this in here. All right, so, and there sets our numbers if we want them or need them. So cash, 12,000. Supplies, 7,500. Prepaid insurance, 1,800. Equipment, 110,000. Accumulated depreciation equipment with a credit of $33,350. Trucks has $60,000. Accumulated depreciation trucks, $21,200. Accounts payable, 4,000. Wages payable, $600. Common stock, 26,000. And now here's the kicker. You've got to put in this 106,150 because it will not balance if you don't. Okay, and let me run a quick total here of both of these. Let me put this in: 12,000, 7,500, 1,800, 110,000, 60,000. Okay, so we want a total here. I've got 191,300. Let's do the other side. 33,350, 21,200, 4,600, 26,000, 106,150. Let's just see if we match. Yes, I think we're okay. 191,300, 191,300. And once again, these are your permanent accounts. This is getting ready for the next year, which begins the next day on April 1st. April 1st is the next beginning of the next year. Let's check our work and see if we got it. I think so. Are we all completely done? Woo-wee. This was a long one. I know, but it still walks you through. So I want you to try to get this other one done. If you'll follow along, this should help. Okay, so we're going to stop the share and say goodbye for now. Thanks for hanging in there. Keep working hard. It'll be worth it. Okay, so we'll see you on the next video.